Okay, welcome everybody for the session before the break. So this morning we have James who's going to tell us about Bitcoin stuff. So let's all welcome James.
Hi, yeah, I'm James. So this is going to be quite a high-level talk. I'm not really going to go into too much technical detail. There's no code. I wasn't really sure what the knowledge base would be like at this. I'm more here to whet your appetite and get you interested in something that I personally find really interesting and exciting. So what are you going to learn from this talk? I'll tell you a bit about myself and my background, how I got into this and what it is I do. A brief overview of the cryptocurrency space, what's going on at the moment. Like it's very big in the news, people are starting to hear about it a lot more. And then why trading and using Python is so profitable at the moment, and then my experience of doing that so far. What will you not learn in this talk? Just for a warning, if anyone's come here expecting anything. I'm not a cryptocurrency expert by any means. I am not a cryptographer. I am an enthusiast, is how I describe myself. When it comes to questions, I'm happy to have discussions, but a lot of my answers might be not too sure. I'm going to go read about it. I'm always trying to find out more. And I'm not a trader by background as well. I can't talk to you about different trading strategies. Again, this is stuff that I'm just learning and reading and getting books and reading online. I have no trading experience other than what I'm about to tell you. So who am I? There are some contact details if you'd like to get in touch. I am a PhD student at Cardiff Mathematics School. I've been doing my PhD for 3.5 weeks now. It's using artificial intelligence to find information in scans of cancer patients. That is as much as I know so far. I find it really interesting. If people want to come and talk to me about that, I'd absolutely love to. But again, a lot of my answers might be, well, I don't know. Like I got a chair in my office the other day, so that was quite good. I've printed off some posters to go on the wall, but it's early doors. My cryptocurrency background, I first got into cryptocurrency and Bitcoin 4 years ago. I bought my first ones. Just because I thought these are cool, I want some. And I completely forgot until it all came back in the news this year, and I suddenly remembered, oh my god, this is amazing, I've actually got some stored away. Maybe they're going to be worth millions. And I went and checked and found the site that I'd bought them off, and I had this notification that said, oh, your initial investment is now worth 4 times more than it originally was, or whatever. And I'd only originally invested £5. As a first-year student, that was all I could manage. So my most successful investment so far, in terms of percentage returns, not particularly good in terms of overall GDP returns. So yeah, that's how I've got into it now, and that really piqued my interest over the last maybe 6 months. So yeah, the overall market. This is how much all cryptocurrencies are worth in US dollars, the total. So we're currently sitting at, I wrote it down this morning, just over 170 billion, the entire market. And as you can see, a huge amount of that is from January this year. We're looking at about, what's that, maybe 10 billion, January 1st, 2017. So it has exploded in over the last 6 months. If you had invested £1,000 £100 into the top 15 cryptocurrencies on January the 1st, 2017, they'd now be worth over £30,000. It's a huge, huge growing market, for which Bitcoin is currently responsible for around 56% of that. It's the biggest cryptocurrency by quite some margin. And there are 12 coins worth over 1 billion, which is taken as a benchmark of really well established. So it is a big market. When you compare it to other markets, it's very small. So this is about just over a quarter of the size of Apple, for example. So it is a lot of money, but in comparison to other markets, it's very, very small. So why Bitcoin and cryptocurrencies? Exchanges have very low fees. Makes it really accessible for traders like myself who can only afford very small amounts of money. I can register an account in 15 minutes, I can deposit £20 and I can trade with that. Fees are less than 0.2%. No minimum fees, no withdrawal fees. So if you're just vaguely interested, putting £20 online and just playing around is actually accessible and possible, instead of traditional markets where you can be paying £5 just to make a trade. So unless you've got large capital, it's going to get very expensive very, very quickly. It's a very young market. So Bitcoin Pizza Day, 22nd of May 2010, was the first time Bitcoin was used to purchase a real physical good, a real physical item. A student on a forum said, "I'd like to buy 2 pizzas with Bitcoin." And I think someone made him an offer of 10,000 Bitcoin, which would now be worth $60 million. So fairly expensive. This is a fantastic Twitter account which daily tweets how much those 2 pizzas would be worth, if anyone's interested. This was taken from 23rd of October, so just a few days ago. So yeah, the first physical item was only bought 7 years ago. It's a very new market. And what this means is that it's quite inefficient at times. So recent bad inflation in Zimbabwe has meant that lots and lots of the population of Zimbabwe are moving to Bitcoin. When over the last week, Bitcoin hit $6,000. At the same time, on Zimbabwe markets, it hit $8,000 to $10,000. So if you were one of the lucky people who was able to trade on both markets, it was incredibly lucrative and incredibly easy to just buy some Bitcoin on a European market, move it for minimal fees and almost instantaneous to a Zimbabwean market, sell it for a 50% premium, withdraw your cash, and do the cycle over and over again. And these opportunities are coming up all over the place. We just have to take advantage of them. Likewise, the derivatives market is almost non-existent. At the moment, you can buy and trade Bitcoin, Ethereum, and other cryptocurrencies, but derivatives based on those products, BitMEX is one of the only exchanges offering derivatives. And again, because there's only one place doing it, there's really good arbitrage opportunities. There is money lying on the table, pretty much. The exchanges are always open. This is huge. So the New York Stock Exchange is open from 9 to 5 days a week, not bank holidays. They take several days extra a year off. Crypto exchanges are open 24/7, 365 days a year, which means that in a span of a year, you get, on average, 5.2 times more trading time. So the markets are maturing at a very quick rate. People are starting the normal cycles that you'll see on traditional exchanges, we are starting to see on cryptocurrency exchanges just 5 times quicker. Everything is really compressed. But it has many advantages. It means that when we code up bots, we don't have to allow for holding a position overnight and how that might affect us. We can just leave it there, sitting and running, and tick, 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 tick. Hopefully earning us some money. Why now? Why should you get into this right now? Surely that graph I showed before with the exponential spike, that should tell everybody, whoa, it's super expensive. Well, yes and no. If I go back to that graph, you can just see, this little blip here. So that was when I originally got into cryptocurrencies. And at the time, that blip looked like this blip. As we zoom out, this is going to keep repeating. Well, I say that, I don't know. Actually, that was some piece of this is not financial advice. Do your own research. I can't be held accountable for anything. I'm here to try and pique your interest. I was told I should actually say that. So there you go, I've got my own back. You're still a very early backer, is what I'm trying to say. Hands up who in this room owns some Bitcoin. Okay, maybe a dozen. Who owns a cryptocurrency that's not Bitcoin? Okay, a similar number. So we're at a technical conference that you've paid to come to, and the people at that conference have then chosen to come to a Bitcoin talk, and maybe a sixth of the people in this room own Bitcoin. If the people in this room don't own Bitcoin, what room in the world is full of people that own Bitcoin? It's a very small percentage of people actually in this space at the moment. You would be a very early backer. There's a fantastic site called bitcoinprivacy.net. The privacy bit is an odd choice of words, because what it does is give you loads and loads of statistics about who owns what Bitcoin. This one in particular I want to point out. Addresses with a positive balance. So this just reached 21 million. If we take a naive assumption that each person only has one Bitcoin address, that means at the moment there are a maximum of 21 million Bitcoin users in the world. Realistically, most Bitcoin holders have several addresses. So we're looking at far less than 21 million Bitcoin holders in the world. Just for comparison, that's about a third of the population of the UK. So it's very, very young, despite all the attention it's getting in the news. So what tools? If you want to actually get into this, I said there won't be any code, but I'm going to point you in the right direction of what you should be looking for. CCXT is a fantastic library, a Python library for cryptocurrency trading and e-commerce with support for many coins, merchants, and APIs. So I showed you a slide of several exchanges before. They all have their own APIs, their own WebSockets. As soon as you want to trade on more than one exchange, you're going to have to write code specific for those exchanges. You want to add a new exchange, new code. CCXT does this for you. It's providing a unified API. It's under very, very active development. But you can sit there on the GitHub repo and watch the commits come in. It really is that fast. But it's quite young, so it needs people like us to be contributing and helping to make it a bigger product. There's links at the end of this talk. I'll post it on Slack for those who want them. Backtrader. This is a massively popular library for testing a strategy you've coded up on historical data. You've gone to an exchange, you've downloaded the order book for Bitcoin for the last 6 months, and you want to test how your strategy performs to give you an indication of how it might perform in the future. Again, Backtrader is written entirely in Python and is the most popular open source backtesting library on GitHub. it's incredibly, incredibly powerful. I'm not going to go through all the features because that was a half-an-hour talk in itself. But it just takes a huge amount of the work out of testing your strategy. They have support for an unbelievable amount of metrics. It really is quite staggering. Creating this plot is about 4 lines of code. So I did create this one. This was just using a simple moving average, which are the blue and the red lines, the black line being the price of the asset, and it's showing me when I would be selling, buying. At the top it's telling me how much money I've got, whether I'm profit or loss, and my position, how long or short I am. At the bottom we've got some more metrics. I don't understand these ones yet. There's again, more reading needs to be done. It's a very, very powerful tool, again, under very active development. So, this is the question on everyone's mind, I'm sure. How much have I made so far doing this? I've been doing this for several months now. How's it gone? Not great. So it turns out it's not easy. Backtrader has support for live trading, unfortunately not for cryptocurrencies yet. So the work for combining that with security, you have to do yourself. So obviously we don't want to be backtesting a strategy that's different code to the one we actually use when we're trading. That's a good way to lose all of your money. So what stage am I at? I'm using each bit individually at the moment. I'm at the stage where I need to combine them all together. So this £0 isn't technically true. I own several different cryptocurrencies, and they have appreciated in value, as that graph before showed. And I would suggest to people that is a perfectly reasonable trading strategy, just to buy and forget. The other thing I'd like to mention is there's a very famous quote that says, when you're caught in a gold rush, the real way to make money is by selling shovels. I think that's really, really appropriate in this situation when we're a massive group of coders like ourselves. There's lots of opportunity for building tools for people, and if we want to see this space grow, we need those tools. We need to make things more accessible for people who aren't technical. We need to make more tools so that bigger players come into the market as well. What was I saying? Yeah, the main thing I want you to take away from this is that it's a fantastic opportunity. It's really easy to get started. You don't need huge amounts of money. It'll be really quick. It is simple, and it's incredibly interesting. I would love to talk to you more about different cryptocurrencies, how they operate under the hood. So please come and speak to me in the corridor. I will be taking some questions. Thank you very much.
Any questions for James?
What strategies for trading have you developed, or have you not developed any strategies yet?
So, I've been working on a market maker bot. So the exchange I was talking about before, BitMEX, actually offers rebates for passive orders. So orders you place that sit on the order book and aren't executed immediately. And so it's a very small rebate, but what that means is you can be a bit riskier with your trades. So literally just, the market's naive enough that at the moment you can still quote bid and ask prices and just let it sit there for the day and get hit up and down and try and make that spread, plus the small rebate that BitMEX is giving. In the future, I would like to see if, I think there's some really interesting work being done taking into account Twitter activity and Reddit's activity, and how watching some tiny little coins' Reddit activity explode and then seeing their price explode afterwards. I think that's really interesting. But also the fact that the blockchain is just available, you can see the transactions that are going through. I feel like there's a lot of information there, and that's why that's another avenue that I'd like to look into.
Are there any currencies in particular that you're interested in at the moment? Are there any that you don't follow, and why?
So, yes. I'm a particular fan of IOTA, which is, instead of using blockchain, it's a directed acyclic graph. When you make a transaction, you confirm 2 other transactions in the network. What this means is there's no miners, there's no miners fees, so transactions really genuinely are feeless. It also has the potential to be far more scalable. Instead of having a blockchain that grows and grows and grows, the blockchain is 160 gig now for Bitcoin. It has the potential to be far more scalable because you don't need to see the full history, you're just confirming a couple of transactions. But it's very experimental, there are a lot of question marks about it, whether it's as secure as Bitcoin. That's something I'm particularly excited about.
Would you, combining your maths experience, in a word, would you guess there might be value in using a machine learning approach?
Absolutely, absolutely. So if I was going to, I was saying I want to look at the underlying blockchain and see the transactions that are going through. I think a machine learning approach to that could be incredibly powerful. There's so much data and information there. Surely we would be able to find something. Who knows? Yes.
Have you got any exposure to distributed apps, like using the blockchain to track any asset, not necessarily a cryptocurrency?
So the distributed apps I've not got into yet. One thing I am quite excited about is there are decentralized exchanges starting to pop up now. Truly peer-to-peer exchanges, really taking the centralization out of cryptocurrency. Because even now, when you store your Bitcoin on an exchange, you don't truly own it. The exchange holds your private keys, and you're banking on the fact that when you press withdraw, they send it to you. That's much like a traditional bank. You could go to TSB and they could say, no, we're closed today, and they can never open again, and the money's gone. I mean, it's unlikely, but these things do happen. So decentralized exchanges, I'm really quite excited about. It's exchanges built on top of blockchain technology itself. Yeah.
Where do you get the historical data to train your models?
So almost all the exchanges open up their API. So that's where I get mine from. There's a really good site called CoinMarketCap, which is where I got some of these graphs from. And again, they have a wealth of data on all the different currencies averaged across the exchanges. So you won't have access to order book data, but you'll be able to see a price that's been weighted according to the different exchanges that the asset's traded on.
Right. And do they give you all the ticks?
Yeah.
So every second, so to speak? Or do you just store it by minute or by 5 minutes?
Depends on the exchange. So for some of them, the historical data is aggregated into minutes or 5 minutes.
Yes.
Most of them open up their WebSocket, and you can get real-time trades going through.
Yeah.
As well. So one part that I was working on is that whilst I might not be actively trading at the moment, I have just got a WebSocket sat there listening and recording everything into HTF5 files sat on a machine.
Yeah.
So that I'm creating my own historical data effectively,
Right.
instead of relying on their API.
Yep. Thanks.
I think there's one last question before the break.
Yeah, I was just wondering how easy it is to go from, say, taking something like historical data and Backtrader, actually developing the algorithm and then running it. Is it? I know nothing about like developing financial algorithms.
So, yeah, neither do I. So Backtrader has support for trading traditional stocks and shares built in, so that you can write one piece of code and tell it to backtest and then tell it to trade on with a couple of particular brokers. For cryptocurrencies, that's not implemented. I don't know if there's plans to. So that's something you have to do yourself. You need to. So I'm going to be starting on making some sort of central controller that will change whether my strategy is executed through Backtrader or through the actual exchanges. But I think there is quite a bit of work in that respect to make it easier for people. But again, so Backtrader and C60 are both open source on GitHub, very actively developed, very good community. So if you want to get involved, it's a great way to help the space. I think there's one more at the back. If we've got time.
I think we've got time.
You said about arbitrage on illiquid exchanges. What are some of the more illiquid exchanges that you use and trust?
Yeah, the trust bit is a really good. So I'm a big fan of BitMEX, and they're actually the biggest exchange by US dollar volume for Bitcoin. They are quite a liquid exchange, but there are some really good opportunities with they offer futures contracts, which is where you're betting on the price of an asset 3 months down the line. And the market is not yet mature enough to keep those close to and in line with the underlying asset price. So you can make a quick 5-10% profit on a trade by betting on a futures price whilst buying the underlying asset, and no matter which way the market moves, you make the difference in price between those two. I'm going to add some links at the end of this. There's some really good YouTube videos from the founder of BitMEX, where he goes through a couple of basic but still profitable in the current climate strategies. They're really good. They got me started.
Okay, great. Let's thank James. So there'll be